All right, welcome back. You've got the market, which is up, 30 points, and at 18,376 is where we are at. Market breadth, it's inching closer and closer. There's not very much gap now. 100 stocks separate, advances and declines. Even on Friday, one concern which many had raised is that the rally was getting perhaps a bit narrower, right? HDFC Bank contributing 50% of the Nifty gains, mid caps and small caps being absolutely flat on a day that the Nifty is up 300 points. Things you need to watch out for. You need a broader move, more inclusive move, and not a narrow move, which is at least at the margin is what we're seeing right now. But for now, we're up 20 on the Nifty, so it's a flat to decent start. Well, it was a good second quarter for InfoEdge once again. Revenues have grown above 50% for the fourth consecutive quarter. Margins expanded 440 basis points versus last year. Important to note that while recruitment business was strong with an over 60% revenue growth, the management has acknowledged moderation in IT hiring, which is around 50% of InfoEdge's recruitment business revenue. Hitesh Oberoi joins us as always, Chief Executive Officer and Managing Director at the company. Hitesh, good to have you with us here. Thank you very much. You know that IT hiring will get back to a more normal kind of phase. It's not showing up in numbers, still growing very, very strongly, Hitesh. Could you describe what happened and how are things looking now in the third quarter?
You're right. The last 7 quarters or so have been fabulous for the company. We've grown at growth rates we've never seen before. But things are beginning to stabilize on the IT front a bit. Attrition rates are coming down at companies. And, some companies may have also overhired. And therefore, we expect IT hiring, growth in IT hiring to moderate going forward. On the other hand, the non-IT market continues to be on fire. Many sort of sectors are benefiting because of the economy opening up post-COVID. And that part of the business has shrunk to about 40-45% of the total business for us because IT had grown handsomely over the last 7-8 quarters, while non-IT companies were pretty much shut for business. But that's beginning to change now. IT companies are slowing down in terms of hiring growth, but non-IT companies continue to hire. Because business is back with the bank for most of them.
Hitesh, in the non-IT space, which are the sectors which are doing the best?
Actually, pretty much all sectors. So, tourism, travel, hospitality, banking, financial services, insurance, retailing, real estate, construction. So almost all non-IT companies. Telecom is back because of 5G. We are seeing pretty much action across the board in non-IT. Healthcare and education also continue to be solid.
Okay, that's great to hear. But this is important, telling us that growth in tech hiring will moderate and you're seeing a slowdown there. Hitesh, hi, good morning and good to speak to you after a while. We're also noticing that there is a pickup in your 99 acres business, right? Real estate has come back in a big way, so that explains why. But tell us a little bit about whether you've gained market share here and what could the growth rates be? In Q2, you grew about 45% year on year. Is that an aberration or is it sustainable?
So our monthly run rate has definitely sort of moved up in real estate. We are currently averaging about 25 crores a month in real estate. And you're right, the real estate market is also very hot right now. Their prices are going up pretty much everywhere. And there's a shortage of sort of new real estate which is in the market because not many projects were taken up during COVID time. So on the one hand, there's a sort of demand. Till about 2 years ago, there was massive supply and not enough demand. Suddenly, there's more demand and not enough supply, which is what is getting causing prices to move up. We don't want prices to move up very quickly. Also, we want real estate to stay affordable because that's what gets end buyers into the market. And if it's too easy to sell real estate, then we are not required because we have sort of developers and brokers and channel partners sell real estate. If there's too much demand, then intermediaries like us are not required. But we're not complaining because for a long time the real estate market was down in the dumps. In fact, for many years because of one issue or the other. After a long time, growth is back in real estate. If volumes pick up, that'll be good for our business going forward.
Hitesh, I echo that. I hope these real estate prices don't shoot up because that dream house is remaining a dream, But, let's focus on your numbers. The ad spends, as a percentage of sales, they have come down gradually. And in this quarter itself, as a percentage of sales, they're lower. Explain this to us and what should be the steady state number out there?
So, it's a sort of one should not look at ad spend as a percentage of total sales of the company, because different businesses sort of have different strategies. So the jobs business, for example, has grown rapidly over the years, but it does not require a lot of ad spending, because we are pretty much a leader. We don't need to sort of spend too much money to build our brand, to get new customers to the platform. On the other hand, in real estate, the market is very competitive. There are many players who are spending a ton of money, so our ad spend in real estate is likely to sort of remain high for a while. Ditto for Jeevan Sathi. While our ad spends in Jeevan Sathi have moderated because we've changed our model. As you know, we went free some time back, and therefore, hopefully the free model will not require as much ad support as the paid model. But still, the space remains competitive, and we'll continue to advertise aggressively in the market.
You want to give us a ballpark
number? Sorry.
Yeah, you want to give us a ballpark number, Hitesh?
I don't have a ballpark number because we take it quarter by quarter. A lot depends on what competition is likely to do or is doing in that market in that particular quarter.
Okay. So you want to tell us a little bit more about what's happening with Jeevan Sathi, in the sense, the revenues have been declining, the EBITDA loss continues, year on year the revenues are down. There's a lot of competition in this space, a lot of digital based providers have opened up, sprung up, I think, in the last 6 to 12 months. Tell us a little bit about what the future outlook is. Do you have any plans with that business at all?
Well, it's a very interesting space and interestingly poised. The main Jeevan Sathi went free to chat, some time back. So we're the only sort of big matrimony site in town where you can register and chat for free. And that's helping us gain a tremendous sort of traffic share and market share. Of course, revenues have taken a beating, but that's by design, and it's only a matter of time before revenues start moving up once we gain market share. On the other hand, we've also acquired 76% in a dating company called IL, and they have a lot of regional dating brands and a national brand in IL. And that business is tiny today, but growing handsomely. So we are following this two-pronged strategy in the matrimony market, where we are a number 3 player. We are trying to disrupt the market and change the game. In the dating market, we now have a play, which is something we did not have earlier. That's a growing market, and that's where the sort of business is going to be 10 years from now.
Hitesh, any thoughts on the unfolding answer? Just a offbeat, tangential question, but this crypto implosion that we are seeing, any thoughts at all? I don't know if you're tracking it or if you're in.
I have no idea. I stay away from stuff I don't understand.
I thought should ask you that. Just one last point. I think the last time you were on, you'd said that interest in the venture capital space is still very strong. It's the late stage which is actually seeing is seeing trouble, right? Low valuations, pressure. Does that continue, or has anything changed at the margin?
No, I think early stage there's still enough activity. There are hundreds and thousands of angel investors who are still investing. There are enough companies that are willing to put in $1 million, $2 million, $5 million. It's at the top end. When companies want to raise 50 million, 100 million, 200 million, there are a lot of questions being asked about the real health of the business.
Okay, all right, Hitesh, thanks so much. Always good having a good chat with you. Look forward to speaking to you sometime during this quarter as well. Well, for the time being, let's focus on another company. InfoEdge, by the way, has moved to the high point of the day, up close to around 4.5%. But another one that's doing well is Patanjali Foods. Well, they posted a mixed set of numbers actually in the second quarter. The company has seen a sharp contraction in margins led by the oil business. But the food business, which is going to be the driver, has been boosted by consolidation. Mr. Sanjeev Asthana, the Chief Executive Officer, joins us. Hi, Mr. Asthana. Good morning, and thanks so much for joining in. Well, the street has read these numbers positively. So let's focus on the value part of your business. That's the food business. I recall you guiding for around 20% of your total revenues will come in from this business. For the past quarter, it was around 28%. What should the quarterly run rate look like for this part of your business from here on?
Overall objective, what we have in terms of taking the foods portfolio to, in terms of the profit part of it to nearly 50%. And revenue-wise, we'd like to take it closer to 25 and eventually to 50, but that's a long-term plan. Very clearly, we expect that this quarter momentum that we had, and of course this was aided by Diwali and a huge bump up in demand. We should be able to sustain that, but not exactly to the levels that what you've seen in the last quarter. There should be some tapering, but eventually we want to get back to the pretty much similar numbers.
Okay. In the oil business, can you tell us what was the volume growth? What was the price decline, and any kind of update on what the margins could be in the second half of the year?
So while, we had two distinct sort of events which occurred, which was unprecedented, nearly 20 years, sort of it hasn't happened, that, we had this sudden sort of banning of exports out of Indonesia. The war continues in East Europe. And this whole sort of banning of, zero COVID policy of China, which impacted the demand side and which also impacted sudden changes which occurred. Now that took the prices, they went up in the first quarter by, by a huge margin of nearly 25%. They dropped anywhere between 38 to 25% in the second quarter, which has had an impact on our margins as well. But volume growth was very healthy. We did about, nearly 500,000 tons of business. To be precise, it was 4.55 lakh tons what we did in the last quarter. The volume growth is very good. The margins contracted, and clearly we had two sets of numbers which impacted us. One was the book losses in the books, and second was the mark to market that we take at the end of the quarter. But that there's a substantial recovery now we have in the marketplace. So in fact, what we lost out on the inventory valuation, we've gained more than that. So this quarter and the next quarter should be pretty good for the oil business.
Right, Sanjeev, in terms of, just to stick with the oil business, in the edible oils business, what's the market share at now? Have you grown year to date so far?
We have grown marginally. So clearly what, we had at the beginning of the year, we had 8%. We should be closer to 8.5 now. Our objective is that we want to go towards the double digit, and our growth in volumes is very healthy. Our distribution continues to expand. We're launching products, new variations. So we're pretty confident of growth in the oils business.
Mr. Asthana, besides the operational performance, the street will be waiting by for the promoters as well to bring down their stake, right? I think it's around 80%. And I think you have a couple of months left to bring it down.
Yeah, that work is going on. We are still 19% is, with the market. We need to maintain a public, company. We need to dilute another 6%. So that work is going on quite actively, and you will hear very soon from us.
Mr. Asthana, when does that deadline expire? December?
It's end of December, but there is some, the allowances, we have sought, and if it exceeds the December, it should be acceptable.
Okay. You gave us your targets for the food portfolio, but I wanted a little more on the palm oil business. You have a 10-year EBITDA target of 2,500 crores and 20% EBITDA margins. Where have you reached now? I mean, if you can just give us some near-term targets for this business.
So oil palm business is pretty much a back-ended sort of a business that we have. So it's a long, so we have already 60,000 hectares, which is already planted. That generates 20% EBITDA. Last year, it was almost 27%, but normalized basis, consistently, we should generate 20% EBITDA. And it's a pretty much an annuity business. So that continues to maintain its growth momentum. And we will continue to grow each year by 10% in the business for next 2 years. And thereafter, you'll see a sudden spike for next 5 years when the business should start to grow at 25% year on year.
Okay. This is the palm oil business, right?
It's oil palm plantation business.
Oil palm plantation business. From 20% the next couple of years, the run rate should grow to 25%, you're saying?
The revenues, but the margins should be pretty much consistent between 18 to 20%.
Got it.
We should be generating EBITDA on a consistent basis.
Got it. You briefly mentioned distribution. Could you tell us how many touch points you have now? What's the plan?
So we have what we've referred before, that every month we are expanding our retail and distribution reach. We are opening new channels of growth. So for example, we had 500,000 touch points directly with the company had. We have additional 500,000 touch points which Patanjali brings to us basis their own sort of direct distribution. In addition to that, of course, we have opened up direct marketing channels through very large army of people who are attached to the yoga camps who directly reach the consumers. And of course, the multiple other channels continue to work. So suffice it to say that every month we are adding anywhere between 20 to 30,000 retail stores in different businesses. And by the end of this year, we should be exiting with direct reach of ours only, Patanjali Foods, to close to 6.25 lakh outlets. And indirectly, of course, we reach about 2x of this to the rural areas. So that expansion continues in the newer businesses as well as in the existing businesses.
All right. Well, thanks a lot. All the best. Thanks for joining in on CNBC TV 18. Let's slip into a quick break on that note. On the other side of the break, Mitesh Thakkar will be joining in for some technical trades. Keep it with the channel.
Absolutely flat. 5-point change on the Nifty. Welcome back. You're at, 18,355. Mitesh Thakkar is with us with a quick check on what you should be doing. Mitesh, so as expected, flattish kind of start. Maybe some more consolidation ahead?
That could be a possibility, Prashant. It's a very subdued kind of a market. But I think with the big gap up which happened on Friday, I think intraday declines for me will be buying opportunities. So let's say it was at about 18,300, 18,280. For the intraday basis becomes your buying zone, and the stop loss should, as I mentioned earlier, I think if you take a slightly positional view, should be around 18,100 levels, 18,125, 100 being the support pivot, and there's a gap as well on the Friday. So with that, I think this quiet day doesn't change much on the structural basis, and therefore maintain a positive bias. The stock calls that I have, there's some kind of breakout happening on the charts of Manappuram, India. That's a buy with a stop at about levels of 110 and 120, 122 could be the near-term target here. That about I have maintained positive bias on IT stocks early in the day, and Mindtree is seeing very strong follow through on the upside. So that's a buy as well. Keep your stop below 36.90. Look for targets of 38.50.
Okay, all right. Thanks a lot for that. So that's on Mindtree picking up pace. By the way, look at Med Plus. Just pull up the chart of Med Plus. 15% higher now. The revenue growth for Med Plus was quite strong this quarter around. Guess the street is reacting to that. Just if we can get that chart up, and volumes are also picking up over there on Med Plus. But it has a lot of other stocks for company as well. Okay, look at that, zooming away. But let's shift focus now to the commodity markets. Manisha Gupta is here. Manisha, what's the one commodity you're looking at today?
Sonia, thank you. I'm looking at metals and I'm looking at copper within that, because what a strong gain we've seen into this one. 5-month highs on copper prices right now, and we've seen them surge on LME and in Shanghai as well. The prices are at 5-month highs. In last 2 weeks, we've seen nearly 12% of gains come in for those prices there, trading above 700 for copper, at around 3.9 in the New York session, and at $8,400 per ton on LME as of now. Well, one good thing is that LME says that they will not ban Russian metal on exchange platform to trade or for settlement, but they will listen to countries and regulators on what they need to do going forward from there. The good news clearly comes in from China, where they have scaled back some COVID measures, whether it has been about the quarantine days or penalties on airlines and travel, etc. All of that has been pulled back slightly, and that has been supportive for the metal prices there. Markets also looking at strong gains, that we are looking at global inventories, which have continued to decline. There have been production concerns in the major producers like Chile and Peru, and you are looking at global inventories continuing to be on the shorter side. There has been a report from Trafigura which says that as of now, the global inventories are at 4.9 days of global consumption. But by the time you end this year, which is another couple of months there, you could be looking at a decline to 2.7 days. So the inventories, pardon me, can actually get more stringent going forward there. The demand in the meanwhile on China and Europe seems to be stabilizing, and that clearly has been supportive. This is what the brokerages are saying on copper. Citi, Macquarie and Goldman Sachs have all warned of weak copper prices in the first half of 2023. They say that there is a recession coming in the major markets, and you are looking at surplus coming into the markets as well. But they also say that by second half of 2023, you are looking at higher prices from where we are right now. Wood Mackenzie clearly very bullish in case of copper prices. $5 per pound is what they are anticipating in case of copper in the second half. That is when they say that inventories will continue to decline. You will see EV and electrification demand coming in, and that perhaps could be supportive going forward.
Okay, thanks a lot, Manisha, for that. But let's talk about some buzzing stocks now. We were just telling you about how MedPlus is up 16%, but that's the aberration in the pharma space, because a lot of stocks are under pressure this morning. Ekta is here with that list. Ekta, over to you.
Thanks for that. Well, yes, I'll start with Aurobindo, where the investor call, in fact, brought up quite a lot of concerns with regards to the US business, which missed estimates this time round. So the oral solids business has seen quite a lot of price competition, according to the management, and they have pushed ahead their guidance for injectables. So they were estimating around $650 to $700 million. Now they're expecting it to only come through in FY25. So that is definitely a disappointment. Interestingly, on the call itself, we had a lot of corporate governance concerns, or rather investor concerns, come up on the corporate governance issues. So Mr. Sarath Reddy, the promoter director who was involved in a recent issue, they said that he was looking after IT and logistics, and his responsibilities will be reallocated. He will now be a non-executive director on the company, and to the best of Aurobindo's knowledge, there is no other director who's involved in the business outside of Aurobindo. Alchem, they've lowered their FY23 margin guidance to 15% from 16% on cost pressures. The US market was impacted by price erosion, which was in double digits. Nomura has downgraded the stock to neutral with a target price which is cut to 3,487. Now, a bunch of pharmaceutical stocks, Dr. Reddy's, Natco, Zydus, Sun, all of them are in focus on account of the innovator Bristol Myers Squibb of Revlimid generic, which is basically the blockbuster cancer drug, along with Natco as well as Teva, which were the first filers, launchers of this particular generic version in March of 2022, have been there's been a lawsuit initiated by Walgreens, which is basically a distributor of drugs in the US, saying that there was unfair competition or delayed generic competition in this particular blockbuster cancer drug, Revlimid generic. What this does do is that it is a potential overhang going forward. There is a lot of back and forth which takes place, and it is likely that there could be similar suits which could be filed on other generic companies, such as Dr. Reddy's, which had exclusivity on 2 strengths when it came to Revlimid generic. So the street is fearing that, and that's the reason why you're seeing these stocks under pressure, despite the fact that generally the innovator is always in focus, and which would be BMS and Celgene on in Revlimid generic. But nonetheless, the overhang continues when it comes to any kind of litigation in the US.
All right, stocks are seeing that pressure. Ekta, thank you very much for that. Let's just have Astral stock intraday up on. It's seen a huge move already with about just an hour of trade behind us. From the day's low, Astral has bounced almost 7%. The initial cut was very sharp. The low was about 1880 or so, and we are back at about 2021 on the price. Sonal is here to tell us what the numbers look like. Sonal, over to you.
Well, the numbers were weak, Prashant, and that was led by the sharp decline that we saw in PVC resin prices, leading to huge inventory losses across the piping system, and that's why Supreme also reported very weak set of numbers. For Astral, overall revenues declined 2.5%. There was an EBITDA decline of 28%, leading to a margin contraction of almost 500 basis points. Profits accordingly were down 48%. Now, in their piping business or the plumbing business, their revenues declined 10.5%. EBITDA also declined, coming in at 112 crore rupees, and margins declined by around 500 basis points here. The other segment that they entered into is paints and adhesives, and even there they saw some amount of pressure. The revenues were up 27%, but EBITDA was absolutely flat for the company, and it was driven by growth in the adhesives business, but the paints business saw some raw material pressures, leading to an operating profit margin decline of 400 basis points. So weak set of numbers, but yes, the stock has recovered because PVC pricing has also improved, and that is something which is making the street positive on this particular sector as well.
Okay, well, thanks a lot for that. Just take a look at that, Prashant. I mean, we've been talking about stocks for the last 1 hour. The market is absolutely flat, right? Not doing anything. Maybe a little gyration here and there, but give and take everything, it's been so quiet
We've
today.
not had this kind of a day for a long time, right? I mean, big gaps, big opening gaps higher or lower, but this is almost unchanged, basically. 18,351. Where we left off on Friday is where we are. With an hour of trade behind us now. We'll take a quick break here. We have an interesting conversation lined up with Indranil Sen Gupta of CLSA India. Key macroeconomic data. The RBI governor, of course, telling us earlier that he expects inflation numbers, the CPI numbers, to be under 7% later today. What does that mean? Indranil, and all of that in just a bit. Okay, welcome back. 15 points lower, so there is a slight downtick coming through right now. Now, the RBI governor, speaking on the sidelines of the Hindustan Times Leadership Summit, did indicate that October inflation, according to him, at least his expectation is it will be under 7%. Just want to play that soundbite out, and then we have Indranil of CLSA joining us in just a bit. Listen in.
Our estimate is that India will this year grow by about 7%. The IMF has projected that India will grow by about 6.8% in the current year. And that puts India among the fastest growing major economies in the world. We have a major challenge with regard to inflation. But comparatively, if you see our target, the upper ceiling is about 6%. The last inflation number which was released for September, the inflation was 7.4%. We expect the October number which will be released on Monday, we expect that to be lower than 7%. Any inflation above 6% is detrimental to growth. So therefore, 6% has been kept as the upper tolerance band. And the fact that we have a tolerance band, between 4 and 6%, that gives RBI enough policy space to use during times of stress.
All right, that's the RBI governor. That's good news. I mean, for macro watchers, Indranil Sen-Gupta is head of research and economist at CLSA India. He's joining us from the sidelines of the 25th annual CITIC CLSA India Forum. Indranil, always a pleasure to have you with us here on the program. Thanks very much. This is good news, what you heard from the RBI governor, isn't it? The fact is, the last inflation print out of the US was also, it gave us the first glimpse that maybe things are correcting. And here, the comment from the RBI governor takes some pressure off the macros.
Yeah, so we are expecting 6.8% today, and we have been arguing for a while that inflation is peaking off. If you look at it, India's inflation has largely been driven by imported inflation from abroad, basically in terms of commodity prices and rain shocks. So money supply has been fairly tight. So we do think inflation will peak off to about 6.3% by March and 5.5% next year.
Okay, 5.5% next year, cooling inflation, of course, always a good thing. Indranil, good morning. The RBI governor also said that there is enough policy space now that the central bank has to use during times of stress. What do you think is indicating towards, and what do you see as the RBI's next move now that inflation is cooling off?
So, we have been saying that the inflation imperative is kind of done. As you heard the governor, inflation, their acceptable inflation trajectory is somewhere between 4 to 6. Optimal inflation for India, I think, is around 5.5, and the policy rate is at 5.9. So now the further tightening by the RBI has to basically respond to the Fed. So we are looking at the RBI hiking to 6.75 based on our call that the Fed will go up to 5.25. But I think once the Fed is done, the RBI will cut fairly rapidly by 100 basis points next year, next fiscal.
But 5.25, the Fed gets to and stays there for a while, is what they're saying. And, and 6.75, right? You said here in India, which means another 100 basis points.
Yeah.
Right?
85 basis points.
85 basis points.
And then you cut back by 100 basis points because, once the market's price that the Fed is done,
right,
the dollar is going to peak off. And, so your the imported inflation problem that you have with the dollar weakening is, going to go away.
Yeah. No, just one thing. So the war is still on, right? That was a big reason why commodity prices spiked up. And the other change at the margin is China, which seems to be coming back, reopening slowly. The first indications coming through, Indranil. That surely, things like oil markets, etc., will price that in, right? I mean, that puts upward pressure overall, because you said this is largely imported inflation, and the biggest of all is oil for us.
So there are two forces at play. First is, as you said, what if the war ends, China reopens, and so on. But there's also the, fact that Fed tightening is likely to push the US and Europe into recession. And historically, we have seen that when the Fed tightens, commodity prices do come off. So from that perspective, even we assume that commodity prices kind of stay flat, taking into account the pull and push. We think that inflation will come down to 5.5%, and that will leave enough room for the RBI to cut rates in the second half of next year. But, obviously hike right now.
Okay. Also, as far as growth is concerned, Indranil, there are certain barometers of growth, whether it's auto sales, cement sales, and we are seeing things pick up on the ground. In fact, a major commercial vehicle maker was telling us that there is fresh capex being put on the ground, because of which, the CV demand has gone up in a big way. What are you noticing as the big trends as far as growth is concerned, and what are you penciling in for not just FY23 but FY24 as well?
So we are looking at growth slowing to 5.2% in FY24 from 6.8%, maybe close to 7 this year. Primarily because once the US goes into recession, we think there will be a hit of at least 100 basis points on India's GDP. To be sure, India will still remain the fastest growing economy, but obviously growth has to come down all over the world if the two largest economies, the US and the Euro area, get into recession. That is what we expect.
Anything in terms of expectations on China, Indranil, from your global team?
So we are looking at growth in China rising to 5% next year. But when you put that against the G2 recession that we expect, that's not going to really help from a global perspective.
And like the Europe and US proper recession, or you think
Yes.
short-lived one?
We are looking at a contraction of 1% for the full year for Europe.
Okay.
For the US, 0.4%. So, recession probably in the first half.
All right. And that should shave off some growth as well. And you're saying that China coming back on will not offset that in any meaningful degree.
Yes.
All right, got it. Sonia?
Okay. Any other, nuances in terms of growth? I mean, just coming back, you did say that growth will slow down to 5.2% purely because of the recessionary situation that the global market is seeing and hence the kind of top-down impact on India. But bottom-up, are you noticing any improvement as far as the Indian internals are concerned?
So we did do a Diwali survey, something we do every year. And, there is obviously some improvement from COVID times. And, especially in urban India, I think, urban India has kind of put COVID behind. But rural recovery is still, limited. And in both in urban India and in rural India, in the lower income segment, there is still stress. So overall, we have a problem of demand, which seems to be persisting in the economy.
And that's something that companies have...
local level.
Yeah. No, companies have told us that as well, Indranil, across the board, across categories. Thanks very much for joining us. Good luck with the conference. Appreciate your time here on CNBC-TV18. Thank you. The market is not making a move whatsoever. We're down, 10-15 points, but there is so much which is moving around, which I think maybe a few things bear mentioning. Info Edge is up a full 5%. The move happened as we were sort of interviewing the management. Manappuram is up 5% as well, so that is looking good. All Cargo had a very large day on Friday. That is up another almost 6% now. Ircon started higher by 3. It's up almost 7%. And Fortis is back at almost 300 kind of levels. That's a big one. Sonia mentioned MedPlus. MedPlus, of course, is a Hyderabad-based company which reported numbers on Friday. Or physical pharmacy stores. Very unique business model. We've had the company speak to us about it. Lots happening. Market breadth. NSE advances to declines ratio is now 1:1. So that gap has been filled, and equal number of gainers and losers at this stage. Sonia.
Okay, and there's lots happening in the primary market as well, right? There's the Rustomjee IPO that opens today. We'll talk more about that on our next show, trading hour at 11 o'clock. So do stay tuned in. But before we wrap the show today, here's a quick reminder that Ramesh Damani is back with us today on Wizards of Dalal Street. Catch the market veteran's journey and inspiration behind his success in our special show at 3:30 p.m. only on CNBC-TV18.